How to limit entering trades. You know, one of the hardest things for traders isn't finding opportunities. It's the exact opposite. It's not jumping into every single setup you see. Because the truth is, in trading, the market will always show you something that looks tempting. A candle pattern here. A moving average crossover there. A news headline that suddenly makes you feel like you have to act now. And before you know it, you've taken 3, 4, maybe even 5 trades in a single day. And the results? Not exactly what you had in mind. I learned this the hard way. Years ago, when I first started, I thought, the more I trade, the more I make. It sounded logical. After all, if one trade could make me $50, then 10 trades could make me $500, right? But here's the catch. Trading isn't a job where you get paid for showing up and doing more. Trading is more like hunting. You can't force the animal to walk into your trap just because you're impatient. You wait, you watch, and you strike only when the odds are tilted in your favor. I didn't understand that back then. So, I overtraded. I was clicking buy and sell like I was playing a video game. And just like a game, my account balance went game over more times than I want to admit. The first thing you have to accept if you want to limit your trades is that doing nothing is a valid trading decision. Seriously. Flat positions can be a position. Think about it. If the market isn't offering a high-quality setup, entering a trade is like paying for a lottery ticket with bad odds. You might get lucky once, but over the long run, those small mistakes pile up. Every trade you take that doesn't match your best setup isn't just a neutral decision. It's a cost. A cost in capital. A cost in mental energy. A cost in focus for the next trade that really matters. And the only way to preserve that energy is to say no, far more than you say yes. Here's a trick that helped me. I created what I call the one setup rule. Before I start the trading day, I tell myself, you're only looking for one setup today, one A-plus trade. If I find it and I take it, great. If I don't find it, then that's it. I close the charts and walk away. At first, it was hard. Really hard. Because when you see a candle forming or a price spike, your brain starts whispering, what if this is the one? You'll miss out. But you have to remember, missing out on a bad trade is a win. Your account stays safe. Your mind stays clear. And you give yourself a better chance to hit the next real opportunity. Another big key is to define your setup in painful detail. I mean painful. Write down exactly what your trade should look like. Not just trendline break or engulfing candle, but trendline break. On the 4H chart, after a pullback, with a strong rejection wick, in line with the daily trend, during the London session. When your rules are that specific, you can filter out 80% of the noise. Because here's the thing, the market will give you endless half setups. They'll be almost right. They'll tempt you. They'll make you think, maybe this one is close enough. That's where discipline comes in. If it's not 100% your setup, it's not your trade. But discipline isn't just about willpower. It's about removing temptation before it starts. Think about it. If you keep your trading platform open all day, staring at every tick, you're just asking for trouble. You're going to see patterns in the noise. You're going to convince yourself to click the button. So here's what I started doing. I only open my platform during my planned trading hours. Outside of that, it's closed. I don't just check the charts in the middle of dinner. I don't look right before bed, because that's when my brain is weakest. That's when the FOMO voice gets louder. Trading is like dieting. In that sense, if you don't keep junk food in the house, you don't eat it at midnight. Speaking of FOMO, That's the biggest psychological reason we overtrade. Fear of missing out is like a shadow that follows every trader. You see the market moving and your mind screams, if you don't get in now, you'll regret it forever. But let me tell you something from experience. There will always be another trade. Always. The market isn't going anywhere. It's been here for decades, and it will be here long after we're gone. If you miss one, another will come along. And if your strategy is solid, missing a trade won't hurt you. Overtrading will. Another thing that helped me was tracking my trades, not just the good ones. Every single time I broke my rules and overtraded, I wrote it down. The date, the reason, the emotion I felt before entering, and the result. And after a month, the pattern slapped me in the face. Most of my overtrades happened when I was bored, tired, or chasing a previous loss. It wasn't because the market gave me something extraordinary. It was because I was in the wrong state of mind. Once you see that pattern in yourself, you can catch it earlier. You can step away from the screen when you feel it coming. And that's a game changer. Limiting trades is also about accepting your edge. If your strategy only gives you 3 high-quality trades a week, then that's your edge. You can't magically make it give you 20 without watering it down. Think of it like fishing with a specific lure. It's only going to catch a certain kind of fish, in certain conditions. If you throw it out at the wrong time, you're not fishing anymore. You're just wasting bait. In trading, your bait is your capital and your focus. Don't waste it on low-probability setups. And here's the deeper truth. Trading isn't about action. It's about patience. It's about sitting through the boring parts so that you're ready for the exciting ones. Most traders lose not because they can't find winners, but because they burn themselves out taking too many losers in between. If you can master the art of doing nothing, you'll be ahead of 90% of traders. And that's not an exaggeration. Now, I'm not saying you should never be aggressive. There are moments in trading when the stars align. The trend is strong. The setup is clear. And the momentum is on your side. In those moments, you should lean in. But those moments are rare. And the only way to have the firepower to act when they come is to protect your capital the rest of the time. Remember, trading is a marathon. If you spend all your energy in the first mile, you won't finish the race. So, how do you limit entering trades? 1. Accept that doing nothing is a decision. 2. Define your setup in detail. 3. Use rules like the one setup rule. 4. Remove temptation by controlling screen time. 5. Track your emotions and learn your patterns. 6. Respect your edge and don't water it down. Do those things. Your account will stop bleeding from small, unnecessary losses. Your confidence will grow because you're only taking your best trades. And your results will start to reflect the trader you've always wanted to be. The hardest part? Trusting the process when it feels slow. Because slow in trading often means safe. And safe means you live to trade another day. The market will always be there tomorrow. The question is, will your capital? That's why limiting trades isn't about holding yourself back. It's about giving yourself the space to trade with clarity, confidence, and purpose. And when you do that, you stop being just another player in the market. You become a professional. And professionals know when not to play